The United States built a massive LPG export system, and now its biggest customer has abruptly shut it down. China has almost completely stopped purchasing American liquefied petroleum gas, triggering a major disruption with global consequences. In this video, you'll learn why China cut off US LPG imports, what caused the sudden break, how it left huge carriers idle in American ports, and which players will benefit or suffer. This conflict could reshape energy trade routes, shift geopolitical balance, and determine who controls the future of gas. So what led to the collapse of a once thriving partnership? China imposed steep tariffs on US LPG, instantly killing price competitiveness. At the same time, China restructured its energy strategy and turned to suppliers like Australia, Indonesia, and Brunei instead. Ships that once sailed to China are now drifting or anchored along US shores, waiting for approvals or reroute instructions. The U.S. Commerce Department also required export licenses for ethane shipments to China, citing national security, creating new bottlenecks and severe financial pressure on exporters and ship owners. This crisis goes beyond economics. China's shift shows that energy is now a geopolitical weapon, not just a commodity. Analysts question whether new partnerships will strengthen China's position. Meanwhile, U.S. exporters and shipping companies face collapsing profits and stalled development projects. China's move signals the use of energy to gain leverage and strategic independence. While the U.S. risks losing revenue and influence, LPG is natural gas chilled into liquid form for transport. Over the last decade, the United States became a top global exporter thanks to new facilities in Louisiana and Texas. China's growing gas demand made it one of the largest American customers. By 2021, China bought over 12% of total U.S. LPG exports, and LPG represented roughly 30% of China's natural gas use. The trade relationship looked secure until early 2025, when China shocked markets with a 15% tariff that soon rose higher. Within weeks, imports dropped to nearly zero, with cargoes canceled or diverted. Ethane shipments collapsed too. Many ethane carriers already en route to China ended up stranded near the Gulf Coast. With nearly half of U.S. ethane exports previously destined for China, delays are severe. Chinese buyers scrambled to resell shipments to Europe or Asia. China's actions are strategic retaliation within a broader confrontation as Beijing diversifies supply and reduces dependence on politically risky partners for the U.S. Losing China has created infrastructure and investment challenges. Export terminals, pipelines, storage, and shipping fleets were built assuming long-term Chinese demand. Now ships sit idle offshore. Contracts are uncertain, and exporters are selling at discounts to clear inventory. Ports are congested, schedules are disrupted, and price swings are hitting domestic markets as storage fills and producers cut output. China's pivot is reshaping global trade. Instead of buying from the U.S., China is increasing imports from Australia, Indonesia, Qatar, and Russia while scaling domestic production. Europe unexpectedly benefits from cheaper redirected LPG. New shipping patterns are emerging, but tighter supplier concentration increases risks for China. Redirecting tankers to new destinations increases fuel costs and congestion, leaving specialized vessels stuck without predictable routes. Looking ahead, the U.S. must aggressively seek new markets in Europe, South Asia, and Latin America, but expansion will be slow and costly. China is accelerating diversification and long-term energy partnerships to avoid dependency. Globally, trade lanes and alliances are shifting as energy becomes a tool of influence rather than just a product. China's halt of U.S. LPG imports signals a major transformation in global energy. When a buyer as large as China steps back, the entire system must adjust. Disruptions ripple through businesses, markets, governments, and consumers. Energy is strategy and power, and this break reveals how fragile the global network truly is. As events evolve, watch supply chains, new energy alliances, and trade route changes, because they will shape prices, politics, and global influence. If you found this valuable, like the video and subscribe for the next deep analysis.